Hey, hi. Okay, today I just want to share with you a bit about the Royal Caribbean stocks, which would be my top picks among the three major cruise liners, like Norwegian Cruise Line, as there's a stock listed as well, and Carnival Cruises also there's is listed in the American Stock Exchange. Just to show you, Royal Caribbean, amidst the COVID crisis, they still managed to come up with a very, very wonderful large cruise. That's amazing. Set sail in 2022. And Royal Caribbean, as I know, in Southeast Asia, because of the Genting closure, and as you know, in Singapore, the Southeast Asia sailing, from around Phuket, uh, Royal Caribbean now is the monopoly now, for high-end ships, and they appeal to the young as well with a lot of their facilities. And also they are gaining momentum in Hong Kong as well, because the two major players were Genting and Royal Caribbean. And Royal Caribbean um, is doing really well, especially the cruise to nowhere and all that. And as you know, Genting already stopped sailing their two large Genting Dream cruises. And I think currently, if you look at the three different companies, Royal Caribbean is the most innovative. Just wanted to show you about consumer spending in general, on why I wanted to stress to you on the real personal consumption expenditure services 2020, since now it's pretty much flat since the COVID period. As you know, personal consumption expenditure on durable goods, non-durable goods, are still on the way, were on the way up, a huge way. And of course, looking from now, the new norm, right? With this reopening and all that, by right, the normal chart would be people, let's say you have $100, right? You would be spending maybe 50 on actual products item, and probably you spend 50 on services, could be travel, airlines, hotel stay. Those are all actually considered as services. And from my point of view, the growth in the consumer services sector will be going up. Of course, this will include cruise stocks as well. So this is something that actually some analysts has already been predicting this trend upwards on consumer services companies, hotels like Booking.com, online travel agents, Airbnb, and but I think I like cruises. And in terms of the oil shock that happens, from how I see it is, inflation will be most pertinent in countries where they don't have natural resources like oil or gas, and will be most pertinent on, especially in Central Europe, and it will be whereas US, where Royal Caribbean cruises manages most of their cruise liners, there in resource rich countries, it will I think oil will actually be on the way down, and there'll be a divergence in terms of gas and um, oil for a short period of time, whereby gas, only in countries like Central Europe will use more gases, so they'll be most affected. And whereas in cruises they don't really use so much um, gases, so I think they are fine in the near future. Another thing is another input cost that would affect um, cruises would be wage, and this is a very good sign as well. The above two things that I just mentioned about the shift in the consumer uh, actual expenditure to consumer services, right, is actually good for inflation as well, because these two, right, really really jam up the pots. And recently, I read a news on CNBC, ports in California also has been easing, and and also because of the closure of some ports in China, not recently, but have also kind of like allowed all those backlog to be removed, and then have start to shop less, buy less things also would reduce the logistic problems. And also spiraling wages also is another problem that can cause inflation, because people have more money, they will be more likely for them to spend. So now, of course, the job reports show that employment is good, but salary growth is actually quite flat in February. So looking at March and April, I think should be similar. Today we are looking at Biden coming out with the jobs report for February. This is actually for March or February. Yeah, I'll double check on that and update you guys. So so if you look at these two critical input costs that are um, may be affecting the business if they are not able to translate that high input cost to increase in their, whether their airline tickets or their cruise tickets. This is something that, let's see, because we have not seen Royal Caribbean revising their price upwards yet, but looks like uh, the US are actually dropping the mask mandate, dropping all the protocol on testing, and connecting of flights was actually a problem last time. If you need to fly to a port of disembarkation, there'll be delay, and and then you may miss your cruise. So I think those are all kind of like reduced, and cruises are kind of like jam packed again very soon, and they will have also having all this 50% occupancy level, and they can't kind of fill up the cruise, and I think this is something that is looking good from the subsequent quarters. So why I pick Royal Caribbean over Carnival and Norwegian Cruises is because this since COVID March 2020 until now, Royal Caribbean is the only company that have not diluted their shares. They have not issued extra additional shares. In fact, they did issue bonds, whereas Carnival and Norwegians are the only company that are issuing extra shares, which is actually a permanent kind of way to dilute your earning per share, even though the company produced, let's say, 100 million, in before COVID in 2019, and if now they were to produce another, let's say they go back to normal and they do 100 million again, the share price shouldn't be reflecting the same EPS. So okay, of course, Royal Caribbean, it was not spared as well during the COVID. They did recently they did a junk bond. This is actually a refinancing, because I will show you their debt chart later, hasn't increased very much. This is actually to refinance a bond that they issued way back in 2020. Um, the only thing is junk bonds, of course, the qualities are they're not corporate grade, they're not graded. So of course you see a 5%, 21 million debt. Actually, this is not something that is balloon over the COVID. It was more or less around that range as well before the COVID period. So because Royal Caribbean, they invest a lot in new cruises and new ships, and they have really high grade ships from the Wonderful of the Seas. I've sat on the Quantum of the Sea as well, and all that. They are just nothing less than impressive, lah. So they are pretty good, and they are, I would say, now it looks like they are second in line, but they should be market leader pretty soon. Especially they appealing to the young, and the young market in cruises. There's still some form of disconnection, and it should be doing well in the near future. So just looking at the depths, of Norwegian cruises. Yeah, Norwegian cruises among the three would is the least, whereas Royal have 20 over million, a billion. So but then their cruises, their ships standards, and they are definitely in a different class. So whereas Carnival is higher at 28. So if you look rank among the trees, then Carnival, although could be the largest, but they would probably be the worst. Dilution of share, high debts, So just to show you some of the thing that happened during the COVID period, there was this is a one time that they did additional public share offering, and then this was 2021, and then and then they did another one way back in 2020 as well. So in the span of the last 2 years, they did share offering two times. It's really bad dilution of shares for these two companies. Of course, now if you look at the market, the share trend, share charts, all the three companies, they are like pretty much behave in tandem. They are, the charts. I would probably, I think I did prepare a screenshot for this to show you. But then if you look at the fundamental, I would say the market cap, of course, Norwegian is the smallest. Royal Caribbean 21 is the second biggest, and of course Carnival is just slightly bigger than Royal. And by it, always remember Royal hasn't dilute any shares, and this is the Norwegian Cruise Line sale. And then oil prices, as you know, recently order unprecedented release of oil reserve. So take note of this. This will be a great news for Royal Caribbean. And of course, we were talking about the wait. Let me see. Responsible consumer or reacted. Yeah, this is just another uh, 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 an analyst, a very famous analyst. She was saying something like, to put that into perspective, Wood highlighted that the increase is the fastest pace since the 90s for actual consumption of goods over order. In fact, people, just because they, retail inventories rose, but real consumption, including services, was flat. So there is room for growth for services. So and then just want to show you what else is good, interesting. So the consumer transition from retail to services is something that is real. This is just to show you again the chart that I think I've showed you earlier as well. So just a quick one. And then Genting share plans, and that will benefit Royal Caribbean, especially in the US, in the Southeast Asia. So just a quick one. I'll show you something else about the CDC dropping mask mandate, and then for cruises, this recommendation against cruise ship. Yeah, this is basically something that they say that now you can travel, and then so they have also said that there's another, yeah. So basically, things are kind of like trying to go back to normal as well. Even airlines also are asking the uh, CDC to reduce to remove the mask mandate situation. As you can see, this is the depth chart, the share outstanding. They have not really gone up very much. In fact, because there's no share dilution. So this is the revenue, and I believe Royal Caribbean will be the turnaround play. If you're looking for turnaround play, I'm still pretty much very bullish on Royal Caribbean. Again, Royal Caribbean share outstanding charts. The Norwegian cruise shares, you can see, they were issuing around. It was around 200 over million shares, and now they have ballooned up to more or less double. So you're kind of like, if you own, your EPS would have been halved. Likewise for Carnival Cruise, 700, they went up by around 40%. So your earning per share would have been dropped as well. So yep, just something else I wanted to show you. I just can't remember where. Let me see. Yeah, so yeah, that's all for today. So I hope you liked the video that I share with you, and thank you very much. And yeah, invest safe, and please click a like and subscribe to the channel. Thanks.